My name is Hugh Agro. I'm the president and CEO of Revival Gold, and it's great to be back with you, Matt.
Good to see you, Hugh. And off the back of some quite good news, have you closed the money yet?
Well, we're just in the final strokes of that.
Final strokes. Okay, well, you better give us the breakdown of that deal. How much did you actually end up with?
Yeah, it moved around since the announcement on July 10th. We're now 29 million Canadian dollars raised, a new strategic investor in EMR Capital with a 12% stake now in the business. Of course, Dundee Corporation, also a strategic investor in the business, has stepped up to maintain their share in the business, sitting at about 5 or so percent. And look, it's really good news for the business, really good structure, really good investors, and we're ramping up to go hard this year with the programs.
Fantastic. Look, I think and we'll get into what you're going to do with the money, the most obvious question, but it's the type of money, the people involved. EMR, Dundee, interesting times now because companies are having to look at alternative ways to get finance, and maybe set themselves up for the future. EMR, tell us a little bit about them and why they decided to come on board.
Well, these are mining smart investors, ex-Rio Tinto, CRA principals, involved with Oxyana and the success of that, and of course started the EMR Capital Fund out of Australia about a dozen years ago. They are not known for going into public companies. Typically they buy private assets privately, but they love our team. They love our prospects with Mercer and Beartrack-Arnett, both in the Western United States, and they've come in for this 12% stake. I think the number one reason why is that they want to be long gold. They want to be long gold in good geography, and they like this model of moving to production on a cost-efficient, a capital-efficient basis on private land as we have it in Utah on the Mercer Gold Project. So a lot of good reasons here. I've been talking a lot in the past about how our model is very similar to what the Aussies have done in terms of building their assets and financing them in a incremental manner rather than carving out multi-billion-dollar projects that have big cost overruns and problems. So I think it's not it should not be too much of a surprise that it's the Australians who've jumped in here with a big check.
And let's look at how that broke down, and because obviously I think I always talk about companies needing competitive attention, or else you kind of got to give away the family jewels, as it were, in deals like this. So can you just talk about the terms of the deal at this point, or is it a bit early pre-close?
No, it's a very clean deal. All the terms have been released, and it's straight equity. No half warrant or warrant. No requirement to do streams or royalties or debt instruments. It's a very clean deal in that respect. We get a board nominee from EMR Capital, which I think is a huge win for both EMR and for us. And we'll benefit from their contribution going forward, which I'm really excited about. But as these things go, it's a very clean deal. They have anti-dilution rights, as does Dundee Corporation, and Dundee Corporation has exercised those rights to maintain their position in the current raise. I would say there was competitive tension along the way. We had a lot of interest in this financing, and I think I alluded to that in some of our past conversations. Matt, these are really solid projects. We've got a team that's well recognized for doing quality work. We took our time. We made sure that we did something that was going to be, friendly to our long-standing shareholders, and the result is a win-win across the board.
Okay, sorry, I'm going to dig down on this a little bit further. Like, very clean structure here, equity only. Does that, for investors like us, or humble investors like us, does that tell us, what they think about the way that you finance things going forward? Or will you be restricted in issuing, or taking money via royalty or streaming? Or will they have a view on the type of debt that you may take on further down the line? I mean, how involved do they want to be?
Well, first of all, they're very smart investors, right? Not just in terms of technical insight, but also in terms of capital markets insight. So we will want to be leaning on them for insight, perspective, and advice along the way. But Having said all of that, it's a clean deal. The board is in charge. The management is executing on the plans, and we retain full flexibility to fund the business as makes most sense for shareholders going forward, and that's a key point. We don't have budget approvals or other kinds of constraints on how we run the business, and so it's, as I say, a very clean deal. And I think that's a function of the fact that EMR and Dundee trust our team. They've seen that we deliver, and we deliver to plan, and we've got a solid board with a lot of experience. So not a big need to change the way we run our business. It's for the benefit of shareholders, for the benefit of our communities, and for the benefit of our team.
I guess what I'm trying to get at, Hugh, is, how can I, as a regular investor, read the situation in terms of limiting that future dilution? The cost of capital going forward is also a big component of it. Do they intend to? I know they've got to retain the right to participate going forward, but to what end, in terms of some sort of equity basis, or do you think these are the sorts of projects that they would look to finance should you start moving into sort of advanced development phase?
Thanks for clarifying the question. So they want to build a mine. They want to build 2 mines, and they want to fund these activities. So EMR is able to do credit, more equity, and everything in between. So it's great to have these guys in our corner. And I think we've got Dundee Corp in our corner as well. They've proven themselves to be pretty astute investors, positioning earlier this year and now stepping up for more, and I think they'll have appetite to do further still. And so all of this creates a very nice kind of situation for our current investors, in that we don't have to worry about where the next check is going to come from. We'll be keeping our eyes open for all alternatives, and as I've said, we're unrestricted in terms of how we proceed, but it's nice to have these guys in our back corner.
Well, for sure. Well, let's get into so now what do you do? I guess people want us to drill the heck out of this thing. So tell us what plans you've discussed with them and what you hope to be able to do.
Well, 50,000 feet of drilling, that's the plan. About 17,000 meters. We had 1 rig arrive this month at the Mercer project. We'll have a 2nd rig arrive very shortly. And possibly a 3rd rig later this year. We've got about 13,000 meters, about 40,000 feet of drilling at Mercer. Most of it will be RC drilling. We've got some core drilling to do as well. The purpose of that drilling will be to advance towards a PFS by upgrading the resource that we have and expanding on it where we can. In the main Mercer area and the South Mercer area. We've also got some metallurgical test work to do. This will be a major de-risking step for us over the next 6 to 8 months. And then at Beartrack, are really excited about this. We're going to be back drilling at Beartrack into the area south of our Joss underground target area. It's high grade. We've got another almost 5 kilometers of strike to the structure, the main structure there. And if you'll remember, this is the thing that Merlin was so excited about, that we tagged into a couple of years ago. And we haven't done any drilling in there in the past couple of years, but we're going to be back in with some really exciting drilling towards the tail end of the year with a 3rd drill rig. At our Beartrack-Arnett project.
Okay, well, let's kind of get to spend the money efficiently. You must have a kind of clear model of and targeting and all of that kind of good stuff, which is going to be driven by the geochem and geotechnical data. How are you applying that or integrating that into the resource model at Mercer?
Well, at Mercer, you might remember we did a soil sample program earlier this year, about 5.7 kilometers of soil sampling. So that will help guide the drilling that we're doing. And we're going to leave some flexibility in the program to move into areas where we have success and back out of areas where we have less success. But we're really excited about what can happen there at Rover, in particular in the north area of the main Mercer project. It's relatively shallow drilling, 150, 200 meters deep holes. So there are going to be a lot of holes. We're going to be moving a lot. I think we've got about 65 or 70 drill pads for this program, and it's going to be a busy year for the team. So some flexibility, guidance from the existing resource model and from the soil geochem work. We will be doing a geophysics program in our West Mercer area later this year, which is all blue sky for us. And we'll continue to do the structural modeling and the interpretation to guide the programs. At Beartrack-Arnett, we've had 2 years to perfect the model there. Structural modeling, geochemical modeling, geophysics. The last 20 holes in the program, over about 1 kilometer of drilling, intersected some 40 meters thick on average of structure, mineralized structure. So this is a really exciting area for us to get into. We've got a high-grade core to that mineralization that we're going to chase. We're going to step out about 2.5 kilometers to the new Sharkey zone and put some holes in there. It's a pretty exciting time for our team, and as you can understand, we've got our running shoes on. It's going to be a busy year.
Yeah. Okay. So will you kind of maybe be able to kind of show us, what that drill plan looks like across both sites, when you've kind of decided where you're going to go? I know you've described broadly, but it'd be great to kind of get into the why, and also kind of look at this kind of, like I say, this kind of integrated data set that has kind of helped and informed that decision.
Yeah, listen, let's meet up at Beaver Creek and talk about some of that. But what I can tell you is this. At Mercer, it's about converting inferred resource to measured and indicated. Remember that we've got about 50-60% of our resources already in the M&I category, but we'll have to move the inferred material into M&I to support a PFS. We've got metallurgical drilling to do, so that is where we collect sample material in PQ and HQ core for the purposes of doing variability testing at various different crush sizes and in various geographic locations across the deposit. We want to follow up on those 5 column tests we did last year, where we got 84% average heap leach recoveries. So we'll follow up on that with more variability test work. And then at Beartrack, the target here, we've already got 4.6 million ounces on that project. What we're looking for is to find the next 1 million or 2 ounces, or at least where those next 1 million or 2 ounces could be. We're not going to do enough drilling to define out that much new resource to the deposit. But what we want to do is unlock the potential for the project, demonstrate to the many parties that are looking at us and following our work that we've got the scale on this thing to potentially take our resource up to 6, 7, 8 million ounces. It's that big a system. The drilling's going to be the truth, and we'll have those results end of this year, beginning of next year.
Okay. I'll kind of step away from the kind of drilling questions I wanted to ask, and so maybe go into things that kind of drive that, vectoring in on the because you've got two quite big properties, right, and quite a bit of it unexplored with Mercer. What are the things that you're using to kind of help you work out where to go first? And what are the things that you're going to use to decide where not to continue drilling? I mean, people would always talk about metallurgical testing process. I think you've talked in the past about the kind of glass lock and clever technologies to aid you there. So can you talk about the various tools you've got available to you in terms of doing this efficient drilling rather than specifically where?
Well, the good news is we've got lots of targets on our projects. Both are over 15,000 acres each. Both are large geological systems. The Mercer project is a Carlin type system. It's a sedimentary sort of situation where we've got this layer cake of mineralized horizons, and so those help guide where we should be drilling, and we'll basically work from the known mineralization out as we go here, and where we find opportunities to expand, where the deposit remains open, we'll tag those in future programs and continue to work on expansion. We do have a lot of infill drilling to do as part of converting inferred material to measured and indicated. We do have a lot of drilling that's for metallurgical and geotechnical purposes to support the PFS. But I think we'll also see some expansion drilling in our Marine Merker area where we already have open prospects, and in the South Merker area where we've got about a kilometer of potential strike in favorable horizons with mercury anomalies on surface. So that's a very interesting targeting tool for these Carlin type systems when you get geochemical anomalies on surface, favorable horizons, structural horizons below, and no drill data. At Beartrack-Arnett, it's a orogenic gold system. These are the very large gold systems that you see in Canada and elsewhere in the world, where you've got a structural setting and lots of permissibility for mineralizing fluids to fill up a gold deposit. In this case, we've hit with every drill hole over 5 kilometers of strike. We know we've got another 5 kilometers of strike under cover, and it's untested. We want to get in there and test that, and that's the obvious next place to go. But the short answer is we could absolutely get a lot more rigs going on these projects. We'll start, with this pivotal financing at Revival Gold with 3 rigs. We'll possibly get up to 4 rigs this year, and I think in future there's going to be a lot more drilling to come. It's just that exciting, and we've got something that has now seen the light of day with the capital we can deploy.
Okay, so do you know what? I'm gonna bring this because I wanted to talk to you about maybe the value of the mineralized waste at Merker, etc. But I don't now. What I want to talk about is, and coming back to the full circle on, you've got 2 big names who know what they're doing. If we look at the landscape of gold developers, North American gold developers, it's a very small subset of gold companies at the moment, because you've got a big resource at the moment. You obviously, Merker, you want to kind of advance things as well. You've now got the money to do it. Coming back to what do these big investors want to see? Do they want to see you move fast track this process so that you can take advantage of this high price gold environment and get one of these assets into production as quickly as possible? Do they want to see you build up something, a big kind of portfolio of gold development companies? Where's the value? Where do they attribute the value of something like Revival Gold?
Full alignment, no change in strategy. We're marching towards production. That is the priority. So I would say the former. We're marching to production with Merker. It's on private ground. It's a dry location based on the data that we have. We think this will permit within a 2-year time frame. We'll launch that process formally beginning of next year. So by 2028, we want to be in construction, and so too do EMR Capital and Dundee Corporation. At the same time, going back to your earlier point about competitive tension, we now have license and ability to unlock some of the bigger value potential in our big geological systems. These are big gold systems in a very good location, and they are very rare assets. So we don't want to leave that potential unlocked as we progress towards production. So it's going to be a bit of a balance, but the number one priority is to move Merker to production, and we're able to do that. It's one of those kind of situations where we can progress to production while we continue to show the potential of the broader portfolio for something much bigger, and that's what these that's what EMR, that's what Dundee are looking for. Exposure to gold in a good location, moving to production and free cash flow.
Right. Okay. That's the path. Moving through permitting is something that you got to take care of. What are the other kind of long poles in the tent? What are the things that you're saying, hey, we need to get on top of this now? Not drilling, obviously, that's going to happen, but I guess the more administrative components, which sometimes take that little bit longer than anyone hopes.
Well, keep people. I mean, people is key to the ability to move smart and quickly and efficiently. So we do have a bit of a ramp up to do in terms of people over the next 6-9 months. So we'll be working on that, and really I think the other pieces of it, opportunities to incrementally add to our portfolio, a land portfolio or land position, areas to incrementally build on the technical data that allow us to move more quickly, fine-tune our permitting timeline, look for opportunities to take advantage of some of these new executive orders out of the Trump administration and the local state authorities to accelerate our programs. These are all things that we'll be doing to fine-tune. And number one job is to work safely, and number two job is to deliver value for our shareholders, our communities, and our team. And I think we're entirely aligned with our shareholders, both new and old, on doing those things.
Yeah. Okay. I think that almost the headline speaks for itself. You've attracted two pretty punchy players in the marketplace who I guess validated this project for you at this point. I guess there's a long periods in this market the last 4 years. You're not sure that was ever going to come.
Well, yeah, and I'll just say, credit to the Crux investor group for getting involved in our story, and there was a certain amount of risk associated with that, but I think you can feel very comforted by the fact that a group like EMR with 12.5 people doing very detailed due diligence over a 6-month period, including site visits, including remodeling of resources, including looking at mine development plans, including looking at scenarios related to political risk, permitting risk, all of those aspects studied over and over again to be able to justify their investment. And I think the same is true of Dundee. Very smart technical people have scrubbed our projects and really given a stamp of approval. And I think the structure of the deal leaves a ton of upside for investors coming in here today. The analysts that are covering our stock see, a 3 to 4 times re-rate in our stock as we continue to progress. We are going to have a lot of activity here, which means lots of news flow and lots of volume and lots of growing interest in our company. We're pro forma 150 million Canadian market cap, which makes us more attractive to larger institutions that need the liquidity and the market cap to get involved. And let's not forget that there's a plethora of intermediate and senior gold producers who are very anxious, very keen to build their portfolios in this environment. We've seen another transaction this morning out of Torex. They're not the only ones looking for to fill their pipelines, to diversify, to lower geopolitical risk. So we'll be hot on that trail as well.
Yeah, I think there's very few near-term producers, new ounces. I think we've seen a plethora of mergers of equals, right? Existing ounces merging with existing ounces. So it'd be nice to see some new ounces come into the marketplace. Now, the one thing I did see a few weeks ago in the SNX Banker yourself, you might have caught your eye, which is obviously Tether coming in and picking up. I think it was La Mancha's stock in Elemental Altius, the gold royalty company. What did you make of that?
I think it's earth-shaking, and that together with the Genius Act just passed through the House and Senate in the United States, bringing stable coins into the U.S. financial system. I think we're going to see a ton of demand for hard assets. It'll start with treasuries. But it's also going to mean, I think, a ton of demand for gold. And what's even more interesting to me is, the development of Streamex coming in here with about $1.1 billion to deploy in the gold space, silver space, metal space generally. And I think this is going to open up a whole new conduit of investors to the hard asset category.
Well, I thought it was interesting that you kind of got these. These coins like needing or designed to be gold backed, right? And I think that's what they're buying into with Elemental Altus. You kind of got these the need to say, well, actually, we are. I think what are they, 40 billion? And you're going to Elemental Altus, not even, whatever they, 300 million. something like that, and you're like going, that's attractive to people. I don't know if it's like a little hedge bet or whatever, but do you see more tokenization of commodities, or more of this, more of this backing, metals companies more broadly, not even specifically gold, I guess.
Yeah, look, I'm not an expert in this, but it seems to me there's a disintermediation that's taken place in financial markets, in transportation, in all areas of services in the global economy, and so tokenization, or the electrification of the ownership of assets, whether it's share certificates being done away with, or the intermediary processes, the brokers that are in the space. And I think we're in the middle of a sea change. So if we can, as developers of gold projects and producers of commodities, if we can find a better way to access the ultimate investor, the individual who would rather trade on an iPad or a cell phone than go through a broker or go through some other intermediary or some other mechanism of trade, I think that's good for our business, and I think we should embrace it. So long as there's proper regulation, and so long as there's there are some rules around how this is done to secure investors from the sorts of things that can go wrong, I think this is great, and I think we should embrace it. And I welcome the fact that the United States has created an opening for these stablecoins to have a regulated environment. I think that's good for the industry.
Yeah, there's a few things on these, like tokenization of royalties or offtake agreements, and I guess or even sort of listing securities or project linked instruments on a kind of blockchain based exchange. You can sort of see these things starting to come through, and I guess ultimately, what I think most companies have been doing for the past 2-3 years is like running around the world hoping that they can get some foreign direct investment into their own projects, and maybe that this is a less, I guess, as an overseas investor, you sometimes face kind of banking friction, or FX friction. Maybe that it removes all of that. But maybe, how about you and I go away and do some work, and maybe come back and do a little show on this, and so share our learnings, because we're starting from a low base, that's for sure. I know I am. And see maybe what the potential is. Yeah,
no, I'd love to do that, man. I think there's a lot to talk about in this area, and I think it's very good for owners of hard assets. It's going to open up a lot more, much bigger audience to what we do.
Yeah. Let's make that a thing, because I think you're right. It's. I know you and I have had talks off camera for the past couple of years. Like, what do we have to do? Where can we find money? And we've seen quite a few sort of alternative finances. We've seen a lot in the uranium space for sure. I think lithium tried it for a bit. We had kind of OEMs sort of moving upstream to kind of secure that metal, and we're seeing that finally governments moving quite well. I wouldn't say quickly. They're moving at least on some of these more critical minerals like rare earths. We saw that with MP materials recently. $400 million. With something like 70+% premium and that's straight at an equity level. So these are the fun conversations at last that we're having. So I'll make that happen, and I'll see you soon, and I'll hopefully see you at Beaver Creek if you're there to talk about what firmer plans on what you're doing with all of this money that you've now got.
Yeah, I'll look forward to giving you an update then. Thank you, Matt.